This one I really wanted to watch. The Economics of Owning a Ship by Neu. Yeah, I've always like wondered about the cost and stuff of like owning a ship. I before like long ago before I even started like streaming, I watched a couple of videos of how it is to like own a plane and own a like helicopter. And geez, bro, the extra cost, like the monthly cost of like maintenance and stuff is so much. Like, jeez. Even if you're someone like privately flying your own helicopter for fun, even like a little one, little tiny helicopter or a little tiny plane, that costs a lot of money, bro. You're gonna be loaded. So I
So, you
wonder
want to
for a
buy a
ship.
ship, or at the very least, you want to know what actually happens after you wire the money and take ownership. First of all, a modern cargo ship can cost anywhere from 50 million, 100
Yeah, so okay, I was specifically talking about cargo ships. Oh wait, I believe I watched the video before, but also like yachts, like big and small yachts. Yeah. So yeah, I assume the the monthly cost of a ship, container ship is gonna be a lot, maybe less than a yacht, a like giant yacht, because like it's like for containers, not for people. I don't know. Okay, but yeah,
First of all, a
I
modern
assume so.
cargo ship can cost anywhere from 50 million, 120 million to even 150 million dollars. That's more than a commercial airliner. It's more than the
Mm.
GDP of some small island nations. But here's the
Oh,
strange
damn.
part. The company operating the ship usually doesn't own it. And more importantly, how does owning a $150 million floating asset actually make you money? Because in
Yeah, yeah, I kind of understand that. Like, these big, rich companies like buy ships and then have like other companies like run them, and then they get their money back. It makes sense. Rich get richer. They put the money, like when you're rich, you put your money into a bunch of stuff, and then it makes you richer.
owning a $150 million floating asset actually make you money? Because in shipping, ownership is a completely different business than operation, and it's far riskier than it looks. When people hear cargo
Mm.
ship, they imagine steel and containers, but a modern container vessel is essentially a floating, self sustaining industrial city. It consists of
Oh,
40,000 plus tons of specialized steel, welded into a hull designed to flex in massive ocean without snapping, and a two-stroke marine engine taller than a four-story building, capable of producing
dang.
100,000 horsepower, all built for an expected operational life of 25 years. Take a large vessel
Mm.
ordered from a major yard like the China State Shipbuilding Corporation or South Korea's Hyundai Heavy Industries. But the prices are not random. It all depends on price of iron at that time, type of engine you want in the ship, and the capacity of yard you want your ship to be built from. And then there's global shipping demand, the ultimate wild card. Shipping prices don't behave like real estate. They behave like volatile stocks. When shipping booms, then prices surge. During downturns, they
Oh,
collapse dramatically. For example, during economic crisis of 2008, some ship values dropped more than 40% in a single year. Ships that cost
jeez.
$100 million to build were suddenly worth $60 million before they even touched the water, simply because the demands were dropped. In global
Mm.
shipping, there are three main players: the shipbuilders, ship operators, and ship owners. And almost always, they're completely separate companies. For example, a global carrier like Maersk, MSC, or CMA CGM operates thousands of vessels. You see their logos painted on the side of the hull, but they do not own all of those vessels. In fact, many operators prefer to own as few as possible. Many are simply chartered.
Mm.
So, who holds the deed to that $150 million piece of steel? It might be a Greek shipping family office. Families in Athens control roughly 20% of the world's entire merchant fleet. It is a multi
Families. Mm.
generational art form of buying low and selling high. It could be a German KG
Oh.
fund, where everyday citizens pool their money to buy a single container ship for tax benefits. Or a Japanese leasing
Mm.
company, massive financial conglomerates that buy ships purely as depreciation assets on their balance sheets. Or even a private equity firm operating out of a sleek office in New York or London. These owners don't move cargo. They don't care about the logistics of getting a PlayStation from Shenzhen to Los Angeles. They just rent their ships. Owning a ship is basically a massive high stakes leasing business. To make your money back, you have to lease it out. There are three main charter types, each with a vastly different risk profile. Number one is the time charter. It is a safe bet. The operator rents the vessel for a fixed daily rate over a specific period. For example, $40,000 per day for 3 years. The owner provides the ship, maintenance, insurance, and crew. The operator handles the fuel, port fees, and cargo logistics. If rates are high when you sign, you lock in strong guaranteed returns. But if the market surges right after you sign, you're stuck at the old rate. Number two is the bareboat
Mm,
charter. The operator rents only the vessel. They
it's
handle
a big game.
absolutely everything from hiring the crew, buying insurance, and maintaining the engine. For the owner, this is lower income but almost zero involvement. Hand over the keys and wait for the monthly check. Then comes number three. That is the spot market. Ships are rented voyage by voyage. Rates swing wildly based on current events, seasonal demand, or sudden geopolitical crises. This is where owners make generational wealth. When the Ever Given got stuck in the Suez Canal in 2021, halting global trade, spot rates went parabolic. Ships that usually rented for $15,000 per day were suddenly commanding $150,000 per day. Owners became
Jeez.
billionaires in a matter of months. But the hangover is brutal.
Yeah. Well, when I heard the Ever Given cost like a billion a day for every day that it's yeah, a billion for every day that is stuck. That's how much it costs people. I didn't know this was why. Like, jeez, 10 times, bro.
In
Yes, sis.
2023, as supply chains normalized, many of those rates fell by over 70%. How do these owners afford the ships in the first place? Because almost no one pays cash. The typical financial structure is 30% equity and 70% bank financing. Maritime banks provide colossal loans secured by the vessel itself. To protect themselves, owners
Mm,
use a legal shield called a special purpose vehicle. If a Greek magnate owns 50 ships, they do not own them under one massive corporate umbrella. Instead, they create 50 separate shell companies, often registered in Liberia, the Marshall Islands,
wow.
or Panama. One company, one ship. Why? Because if a ship spills oil or goes hopelessly bankrupt, the rest of the fleet is safe. But there's a massive problem lurking here. Let's say you borrow $70 million to buy a $100 million ship. A year later, the market crashes and the resale value drops to $50 million. You're now underwater on your loan. The collateral is worth less than the debt. The bank panics and demands cash. If you can't pay, they seize the fleet. Shipping history is littered with the corpses of over leveraged companies. Let's assume you manage the debt perfectly.
Dang.
You still face another enemy regulations. A ship physically lasts 25 years, but environmental rules are currently turning the industry upside down. The push to decarbonize means
Great.
sudden mandates for new fuel systems, engine retrofits, and massive exhaust scrubbers, costing millions per ship. Furthermore, what happens if you build a ship today that runs on liquefied natural gas to find out in 10 years that the global standard is green methanol? Your ship becomes a stranded asset. It's too expensive to run, illegal in certain ports, and impossible to sell. Its $150 million drops to zero. Owners are
Wow.
constantly gambling on fuel trends, carbon taxes, and geopolitics. Shipping
So what you're telling me is it's like gambling. I see.
rewards patience and heavily punishes overconfidence. Because of this, ships are traded just like volatile commodities. A vessel bought for $150 million might be worth $180 million in a boom because buyers want a ship today, or drop to $90 million in a crash. Some owners don't even intend to operate the ship for its full lifespan. They speculate, buy low, charter high, sell high. And when a ship finally reaches the end of its 25-year life, it still holds value. It has sailed one last time to shipbreaking beaches in places like Along India or Chittagong, Bangladesh. There, it is run aground at
Mm,
high tide and dismantled by hand. The owner is paid for the raw scrap weight of the steel. Even in death, a large cargo ship might yield $15 million in scrap metal, a final absolute floor
ooh.
to the asset's value. So, why does this chaotic system work? For an operator like Maersk, owning every ship in their fleet is incredibly capital intensive and debt loaded. If global trade slows down, an operator with 500 owned ships still has to pay 500 mortgages even if they're sailing empty. Chartering provides flexibility. If the demand drops, the operator simply lets their short term charters expire and hands the ships back to the owners. The operator stays lean, the owner takes the financial hit. This separation of ownership and operations spreads risk across the global financial system. When an operator goes bankrupt, the ships don't disappear. The owners simply take them back and recharter them to a competitor. The companies may die, but the ship keeps moving. Owning a
Hmm.
$150 million ship isn't just renting steel. It means managing staggering debt, predicting macroeconomic cycles, betting on environmental regulations, and surviving brutal volatility. But when you multiply
And here I thought it would be more simpler than owning a yacht. Now the yacht sounds more better, bro. At least with that you can like hold parties and then charge people to like enter the party and stuff like that. Like this is just madness.
that across hundreds of ships, leveraging debt and reading the tides of global trade, you begin to understand how modern maritime empires are built, not through control of the cargo, but through the relentless calculation of risk.
A great video from Neu. I remember I watched this one before. Wait, yeah, I watched this one before. I think this was the first video I watched from them. Yeah, it was great videos. You want to buy a ship? My wallet. Bruce Wayne feed be like wait, Bruce, I don't get the joke. This completely changed how I see shipping. It's basically real estate plus stock market plus gambling all in one. Yup. Wombo combo. Want to buy a ship? Well, I wish I could. Set up a time. Shit, I mean, yeah, let's just all congregate and put together funds to buy a ship. No, yeah, getting interesting recommendations.